Hello, everyone. Welcome. We'll get started shortly. Welcome, everyone. We'll get started shortly. Everyone, welcome. Hey, Deborah, welcome. Welcome, everyone. Welcome.
What's up, Big D?
Hey, Ray. Welcome, Ray. Hey, Arthur. Welcome. Guys, we'll get started. Q&A this evening. Q&A. All right. Welcome, everyone. Welcome, guys. Welcome. This evening is our Q&A class. All right. So our Q&A class. I'm going to share my screen. All right. So welcome. Welcome, Deborah. Hey, Corey. Welcome. Welcome, Ray. Welcome, Arthur. Guys, we're going to get started here. All right. This is our Q&A class. There's some things I want to go over. But I wanted to find out first what questions you guys might have. Hey, Tracy, welcome, Tracy.
Hey, Dave.
All right, welcome. Whether it's the markets, the systems, right? Any of the markets. So stocks, Forex, cryptos, anything at all. Any questions at all? So does anyone have any questions for me?
I have some questions.
Hey, Corey. Okay.
All right. So looks like the trades that I've set aside this week, the ones that I've gotten into are getting pretty successful. And I was wondering if you had any tips on how to scale out, like you mentioned previously.
Oh, okay. This is in Monster Scalper, I'm assuming.
That's correct. That's correct.
Okay. Which pairs are you in, Corey?
Quite a few. I'm in the GBP CAD, which hasn't yielded anything yet. The GBP JPY, and the GBP SGD. And the part that I'm touching on, or the reason I want to know about scaling out, is because I just scaled up my SGD position,
Okay.
and I want to learn more about how to take profits while things are, I'm just trying to strike while the iron is hot and take profits while they're there to take.
Okay. Okay. So let's take a look at each. You're using forex.com, right?
And that's correct.
Okay. Hey, Alan. Welcome, Alan. Okay. So those are the three. So pound CAD, pound yen, and pound SGD.
That's right.
Those are the only ones, or you have more?
Those I'm trying to be disciplined, and the game plan recommends that I only do three at a time, so I'm sticking to three at a time.
Okay. All right. All right. Good. Okay. So let's take a look at pound and the pound pairs. We talked about those last night, right? We also talked about the yen pairs, right? And Ray, thank you for bringing that to our attention. So we had buy signals that came out, and those are looking really good. So let's go over those, Corey, for you. So pound CAD. Let's take a look. And you're trading on the 240, I'm assuming?
Yeah, I'm trading on 240 for all of them.
On all of them. Okay. And you wanted to figure out how to scale out rather than scaling up.
Right. Like I said, I've already scaled up on one of my positions, and that one position that I scaled up on is because of the level of success. So now I'm trying to figure out, what game plan I need to be forming in order to scale out.
Okay.
Because
Okay.
when the position, when it grows, and when the price gets high enough, it's got to come down eventually. So I just want to be ready for that.
Okay. And we'll start doing more of that, right? Scaling out so that you guys are taking profits, right? Always banking. It's pretty cool when we scale out and we're taking profits, right? It's psychologically it's great, when we take profits, all right? Rather than scaling up and adding more risk, right? So when we scale up and we add more risk, it's the reverse, right? It's the reverse. So we'll and now we can do that with forex.com. Have you guys downloaded the new platform for forex.com yet? Have you guys?
If by that you mean deleting the app and re-downloading it from the app store, that's what you mean, right?
Yeah, either way, I don't think you have to remove it. Yeah, just download there's a new version. There's a new forex.com version. All right. Where
Okay.
you can scaling up or scaling out. It really allows us to do that because each trade that you take, it's a line item. It's like a line item. It's a separate order. All right. Whereas before, prior to the update, right, it lumped it all, right? Whenever you scale up, right, it would add it to one order. So if you close your trade, you would have to close the whole trade, right? You guys know that, right? You remember that, right?
Okay.
So make sure you guys go on, whether you have it on, I use it on my phone. All right. Make sure you download. There's a new version where it allows you to each order that you place, right? Each trade is a separate trade. It's a separate trade, right? So that will help. Hey, Kawisi, welcome. Hey, Mary, welcome. All right. Hey, Alan, welcome. All right. So, if you want it now, there are two ways of doing this, Corey. All right. When we scale out of trades, and we'll take your pound CAD here. All right. Where was your entry on pound CAD?
My
Roughly
entry was 1.545
1.545.
10.
Okay, I'm trying to see.
And with the pound CAD, like I said, it hasn't yielded anything yet. I'm not profitable on that position yet. Like I've been holding it because it hasn't gotten too far gone,
Okay.
And it broke green a few times today, but it hasn't stayed there. So
Okay.
I'm just holding on to it because I don't want to be too impatient about it, just in case it actually does break out. Because
Okay.
it looked like it was going to do it, but I guess it reversed a few times. So I'm just waiting to see how it shakes out.
Okay. Well, we'll use this as an example, right? And then we'll look at your other pairs, right? Okay, so let's say for instance, we got it here, right? At the buy signal. All right, at the buy signal. Now, if you're looking to scale out, just know that your initial trade, right? Initial trade might be larger. So rather than taking, you can take rather than taking one big trade, you might take 3 small trades here. Okay, so you might, let's make it easy, right? So we might do one lot, right? Right, mini lot, right? One lot here, do a second lot, and then a third lot. So you would take 3 separate trades. All right. Okay. Now you can do it. You guys can figure out how to do it, but that's just, you could take 3 separate trades. All right. When the first trade, when it gets to this right here, this resistance right here, all right, this resistance right here, it's breaking new resistance right here. New buys are coming in, right? You're going to close one position, and then you're going to let the other 2 run. All right.
Okay.
You got me so far? You with me?
Right. That first resistance.
Yeah, at that first level here, when it breaks that resistance, you're going to take profits.
Okay.
Okay. As the price go higher, right? So you have 3. We started with 3 positions, right? We started with 3 positions right here. 3 individual positions, right? For a set amount. So let's say, like I said, 1 unit, right? Or 1 unit. Well, not 1 unit, but you guys know what I mean. All right. So 3 individual trades, right? When it breaks that resistance, guess what? You're going to close one position, take profits off the table. Okay. As the price moves higher, breaks a second resistance, you're going to close the second trade, right? So now you have 1 trade left. So you close one here, right? You closed another one here, and now you've got 1 trade. If it goes higher, right? Goes higher, we've got distribution, right? Break support, then you close the final trade. All right, then you close the final trade. That makes sense?
Yeah, it makes perfect sense.
Yeah. So what we're doing is we constantly, rather than adding risk, right? We're taking off risk, but we're also banking profits. Okay. Now, if all else fails, let's say it doesn't break new resistance, doesn't make new highs, break support, guess what? You close them all.
Okay. Got it.
You close them all. All right. All right. Now we can do that because of the update that forex.com did. Okay. So now your initial trade might be a bit larger, right? In order to do that. Okay. But rather than trading 3 pairs, right? Just trade 1 or 2. Right. So take that same capital, Corey. Take that same capital that you spread in all 3, right? Initially, right? Just do it with 1.
Okay.
You can do it with 1 trade or 2 trades, okay? Because your initial trade will be a larger, right? Will be a bit
Okay.
larger.
Okay. That's doable.
Okay. So let's see here. So rather than what we did, what you did before, rather than scaling up, going to be scaling out. So rather than adding, right? So your first trade was here, right? Then breaks resistance. Your second trade is here. You keep adding, right? Right. And then your third trade, break of resistance here. You add a third trade here, right? And guess what happens? If it fails, guess what? It takes a lot of your profit, and we're not banking, right? Now, this works well too if we catch a nice trend, right? But if it doesn't, right, then we lose a lot of that profit. Okay. So what we want to do is, right, take profits. By the time we get into that distribution phase, that last trade, we want to minimize the risk. We should have only one position, and guess what? We've banked profits, and it just feels really good. It feels really good as a trader when you're constantly, banking profits, taking money off the table. Okay. So I'm
Right.
glad you mentioned that, Corey. Did you are you looking to scale? You're looking to scale. Let's take a look at SGD. Let's take a look at that, because you earned some profit in that one, right?
Right.
Okay.
That's my most successful trade this week.
Okay. Let these run too. Give those a chance. Those are new opportunities there. So, so where is your buy? Where did you enter at the buy signal?
I think shortly after, probably one or two candles after, I opened at 1.607.
Okay.
Yeah, 16076 and some change.
Okay. And you took only one position on this?
Yeah, I initially bought one lot, and then I scaled up and I got another lot. Like after it started, showing signs of success, and as it trended upward. So that's when I got to thinking about scaling out. At what are the rules? When should I do it, and when shouldn't I do it?
Okay. All right. Perfect. So we'll use this as an example here. Make a note on with these guys, right? These runs, on average, right? You will get about 2 to 3 reaccumulations. Okay, so 2 to 3 reaccumulations. Right? What does that mean? What does that mean? 2 to 3 reaccumulations.
Meaning new buyers are gonna enter the market at 3 different times during the trend.
Yes, yes. So let's take a look at as an example, and this will give you guys a kind of a gauge of how many lots to add. I want to find. Okay, so here's a good example here. All right, here's a good example. So it's not gonna give you 5 or 6 or 8 reaccumulations, right? Right. On a daily time frame, it might, but on the 240, 2, 3, if you're lucky, 4. All right. So here is the first one here. That's reaccumulation. And this will help, right, with how many lots you add. Okay. So here is one reaccumulation. Here is 2, your second reaccumulation, and guess what? Here's the third one here, but that basically failed, right? Okay, so 1, 2. Remember, I said 2 to 3. If you're real lucky, 4, right? right? If you get 4, that means you got about a month, right? You got about a month run. All right. So you did good. So two different positions, right? Maximum you can take 3 positions. So let's say you took 3 positions here. All right, Corey, 3 positions here on that buy signal. We want to get it right at that buy signal. All right, that's a horrible 3. So 3 here, 3 positions here. You're going to close the first one here, take profits. You're going to close the second one here. All right, this time we don't have a third one. It didn't break, right?
Right.
All right. Okay, or you could do this. Take your first one. Let it go though. You might want to take your first one here. This one here is still in. Let's say it's break, give you a red candle here, then you close, right? You close the second one. That makes sense?
Makes sense.
All right. Anyone has any questions on here? Rather than taking your first position here, second position here, right? Third position here, right? This isn't scaling up, right? You took your first position here, second, third, and then getting out here. Right? There are times when you can do you can do both. There are times depending on the market, you can scale up, right? So if it's a really strong rotation, right? It's a really strong rotation, everything is lining up, scale up. Okay, but if it's not very strong, if it's not hey Zaire, welcome. If it's not a very strong rotation, all right, and you're not too concerned, scale out. Scale out. So you can do both. You can scale in and scale out depending on the risk. All right. All right. So I want to take a look at your pound SGD right here. Okay, so you have 2 positions here.
Yes.
So you have 2 positions here, right? Okay. So when would you take profits on your first position, on one of your positions?
When I get my next support and resistance lines, and when it reaches that first resistance line.
Very good. So let's say price is moving higher. All right. You got support, new support and resistance lines. All right. Breaks resistance, take profits. So close one of your 2 trades. Let the other one run. Let the other one run. All right. So let's say it moves up higher, get support and resistance line, break support. Right here, you close the other trade. Right. And then now you're done.
Got it.
Okay. That's going to feel so much better. Right.
Than just giving all the profits back.
What's that?
Say it feels better than just giving all the profits back.
Yeah. Yeah. It's going to feel so much better when you guys do this. And with the update, I was so happy when I saw that update. Right. When I saw that update with Forex.com. Right. We can do it with Trader's Way, but Trader's Way is offshore, right? And you know, we don't need 500 to 1 leverage. You know, that's crazy. Too much leverage. You know, you blow up your accounts with that. All right. So it's nice to have that feature. And it's going to feel really good to take profits off the table. And the cool thing is, by the time you get high in that markup phase, right, you're not in 3 and 4 positions. You might be in only 1 position. All right. All right. Good job. I'm glad you're thinking about doing that, Corey. Try it with this trade here. Try it with the trades that you're in. But remember,
yeah, definitely.
Yeah. Remember, you don't have if capital, you know, still watch your capital rather than three trades. You might just do 1. You might just do 1 pair. Okay, a couple of pairs. All right. Good job. Good job. Good job. Good job. Anyone else? Anyone else? Any questions on this? What Corey is doing, or any other questions? This is Q&A. So
I have another unrelated question. What broker do you recommend for Canadians?
for Canadians, oh, I have no idea. I think it should be. I mean,
I was thinking interactive brokers.
yeah, I think I think Canadians have access to the same brokers. Yeah. So what's up? What do you have up there? You have Interactive, right? What other brokers?
I checked the recommendation for Fidelity. They're not in Canada.
They're not in, okay.
Yeah. Otherwise, there's TD. It's different from Thinkorswim though. That's only for Americans.
Okay.
And then they have on the Canadian side direct
How about
investing.
Robinhood? Robinhood?
Yeah, I can do that. I think that's like an app on the phone, but I think something like your systems I would prefer. It's just you can do a lot more and have more control and
Yeah.
how about another question? For trades, how often do you factor in or consider level 2 data?
Oh, level 2. We don't. You know, level 2 is for very active trading, right? Where you want to see the market makers, right? You want to see where the market makers are holding positions. So that's for day trading. We don't use level 2 at all. Yeah, we do more trend following, more longer term, but yeah, we don't use level 2. Yeah, you've used level 2.
No, I was just thinking if it's worth it or not because it can get pretty pricey too. So, and I don't think it's too important, but I mean, but it depends. Like if I'm a full time, I don't honestly. It can get a little pricey though, so maybe it's not worth it.
Yeah, it's pricey. Usually, you know, when you trade for a firm, that's when you would use level 2. But I mean, you're there constantly, you know, watching the markets. For what we do, you know, we don't need it. We don't need it. We don't need it. And I think Forex.com, I'm not sure in Canada. I would check though if you plan on using TradeStation. I would find out if and I'll find out from them about Canada too. But yeah, good question. Good question. All right. Any other questions? Any other questions, guys? Any other questions?
I was thinking either using a savings account or a margin account for trading. What do you suggest? I think you use margin, right? Or you? Is that what you?
Which market? For which market?
Oh yeah, it depends too. I guess. Oh,
Yeah.
Both the forex market and stocks in general, I guess.
Okay. You know, margin works for you and works against you. With equities, you know, with Forex, it's built in, right? So, you know, leverage is all built in. With Forex.com, right, it's 50-to-1 leverage. All right, 50-to-1 leverage. All right, so that's enough leverage to make money, but you're not gonna blow up your account. All right. Offshore, in order to get more leverage, you've got to go offshore, right? So you've got to go out of the US. The problem with that is that, you know, these companies are not regulated. So if you start using, you know, putting a lot of capital to work, that's a concern that they're not regulated on the US, right? So there's two that I'm aware of that's pretty good, right? Most traders don't have a big issue with them. Is Trader's Way. Some of our traders use Trader's Way, Trader's Way, and Hugo's Way, but it's 500-to-1 leverage. So I know it's scalable, right? The maximum is 500-to-1, but you can tailor that back. You can pull that back, so you don't have to do 500-to-1. But for what most Forex traders need is Forex.com for what we do. All right. And they're reputable. They are the number one. They used to be FXCM, and FXCM blew up on a big Swiss. I don't want to get into that, but Forex.com works well. All right. With equities, with equities, it's up to you. You can get margin with the equity brokers. All right. What we do here is, rather than adding on risk, right, adding on more risk, we go smaller. All right. So there are two things you can do rather than getting into that margin game. That margin game is it can hurt you, right? So two things you can do: you can trade options, right, to reduce that, right, that risk. All right, but you do have a time element, right? So it will things can expire on you with options. But we also use stock boss, so we can trade cheap stocks, right? Right, stocks that are under $10, right? Less expensive stocks, so you don't need margin, right? You don't need margin, more capital to get positions with the with the higher price stocks. Okay, so that's a couple of ways. I don't margin. It hurts. It can hurt you. It can hurt you. All right.
Thanks for that.
You're welcome. You're welcome. Alan, level two is a data that's and it is a bit costly, right? Data you can get on different platforms where you could see the market makers, right? So you could see, you go further in to see the price action and see where the market makers are holding trades. All right, but that's a whole nother game. That is for day traders, right? Day traders. Okay. All right. Any other questions? Any other questions? Any other questions? Any questions on what's happening with Forex now with the dollar pairs? Any questions on the dollar pairs? We should be out of the dollar pairs. All right. We should be out. That rotation is done. You guys see here, right? That rotation is done for now. All right, for now. All right, you guys should see that.
So are you holding off on calling another rotation, or is another rotation decided?
Oh, Corey.
Because it seems like everything is all over the place right now.
Yeah, I think I'm hoping it will be the yen pairs. Yeah, we've gotten nice. If we look here and we're gonna count, so let's count the buy signals, right? So we've got a buy signal here on ZAR yen, so that's one buy signal. Remember, we want about 80 to 90% buy signals. All right, dollar yen. All right, so that's another buy signal there. All right, and are we looking for a buy signal? TRY, no buy signal. SGD, that has a buy signal here. Okay, so we've got 3 buy signals, right? So 3 buy signals. NZD, no buy signal yet. That should come soon. HKD, we got another buy signal. All right. Pound yen, we got a buy signal. You guys should have gotten into pound yen. Really, you got into pound yen? Good job. It's looking really nice. Whenever we have a chance to get into pound yen, get into pound yen. Was that Corey?
Yeah, pound yen was one of my positions that I mentioned.
Yeah. Euro yen. I think we've got a buy signal right there. Okay. Did I mark down? Okay. Swiss yen, nothing yet. CAD yen, buy signal. And then Aussie yen, no buy signal yet. So go 1, 2, 3, 4, 5, 6, 7. How many pairs do we have? 1, 2, 3, 4, 5, 6, 7. So we need about 2 or 3 more. 2 more, we'll call it. All right. So 2 more, 3 more, just for confirmation, we'll call it. All right, we'll call it.
And is that are we not, like, because I'm noticing, like, what has me confused is that the pound pairs, they have 100% buy signal, or at least they're reading at 100% markup. So I guess the reason that you're not calling that the next rotation is because it moves on its own. Am I correct?
It's not a big rotate. It's not big enough, right?
Okay.
This group is not large enough, right? We'll call the rotations in the euro, the dollar, and yen. All right. We'll call, the rotation, that means things are really, they're really moving, right? Forex is really turning around, right? Things are turning around. This pound pair is not enough, not large enough, right? The big ones are the dollar and the yen. Those are the big ones, right? So the dollar, usually the dollar, and if you guys look, the dollar and the yen, they'll go the opposite, right? They'll go the opposite. All right. The euro will kind of go with the dollar, and the pound will kind of do its own thing. Okay. This right here, the Aussie, the Kiwi, and the dollar, the yen pairs will go together too. Okay, they'll go together. So what we're looking for is here. This is the rotation. 1 second here. So, right, this is Asia, right? So their market is opening right now. All right, that's Asia. So the Aussie, right? We'll never have a rotation. We'll never call it a rotation in the Aussie pairs. It's just too small, right? That's only 4 pairs. We'll never call a rotation in the Kiwi pairs, right? Right. You can get on board with the rotation in the yen pairs, right? You can get on board, but we want, and then the dollar pair, these here. So those are going to be your big rotation. That doesn't mean you can't trade these, right? But yeah, we won't call a rotation in the pound.
Okay.
Pair. Okay.
That's fair.
Yeah. No, it's tradable, but it's not. But let's take a look at it. That has a second buy signal. Now, we talked about this last night, so you guys should be trading this. It's offering a really nice opportunity. So it looks like all of them have buy signals. But Corey, you never know. We might start doing that. I'm flexible. I'm flexible.
Oh yeah, if you have your reasons for not declaring it, then I get it. I mean, it seems to make sense. If it's not a big group, I get it.
Yeah. Yeah, the big groups, when we look for rotation, right? It's like, okay, everyone on deck. Right? Right? Everyone on deck, we getting ready. We gotta put some capital to work, right? Things are setting up, right? And we only get that from the big groups, All right. Yeah, not that these are not tradable, but we can't get, I can't get too excited about this here. Can't get too excited. Right here, the yen, the dollar, and then we have So we have other Corey, you've got some good, you're thinking. We have some other tools, right, that will help us to confirm the big rotations. And the dollar index is one of them. All right. And we don't talk about this a lot, but the yen too, right? The yen, the Japanese yen. We'll watch that too. We don't do it as much, right? But we can use that too to really watch the big rotations. Okay. But yeah, you know, if the pound really starts to provide really good results, because things change, the markets change, right? If we find that there are real opportunities in the pound, for example, we might start looking at it. It depends on how they perform also. All right. Depends. If the dollar, for example, starts consolidating, right, doesn't give a lot of opportunities, right, and for a period of time, we won't pay any attention to it, or we won't pay much attention to it. All right. So, all right.
I forgot to make a note of this yesterday, but you pointed at the Indu. What does that serve as the barometer for? Like which pairs does that go with?
The what? The Indu?
Yeah, you pointed at the a chart and it said Indu. I don't know if I read that correctly, but INDU, and you said something about it. And I don't know if I understood it correctly.
Oh, the hold on. The Dow. You mean the Dow?
Okay.
The
Yeah.
Dow.
Okay. All right.
Okay. So, okay. What was your question though?
That what market does that run with, or what market runs with that
With
chart?
the equities. So the stock market, equity market.
Okay.
Yeah.
Yeah.
The Dow, the
Yeah.
Dow Jones, the Dow Jones. Yeah, the Dow.
Okay.
Jones.
We don't have to get into it. I just needed to make that quick note.
Yeah. Yeah. Let's see here. All right. Any other questions? Any other questions?
Yes, for me.
Hey, Alan.
Hey, how are you doing?
Good.
So, what would be the best source to get fundamentals? Because for my trading style, I'm really data driven.
You're a fundamental guy, huh?
Yeah.
All right. So what's your question then?
What would be the best place to get that data, and what data should I really look out for so that I won't get caught up in all the traps?
Okay. Let me ask you. Do you trade off data right now? You trade off fundamental data?
Yeah, between fundamentals and technicals. So if my fundamentals and my technicals match up with each other, that's when I usually take the trade. But sometimes it gets kind of messy.
How so?
Like my technicals would match my fundamentals, but however, the fundamentals are already been priced in. Yeah.
All right. So which comes first to you? Which is primary?
Primary for me will be technicals.
Okay. All right. All right. All right. So you need fundamentals to kind of confirm the technical, right?
Correct.
Okay. Then you're on the right track. You'll get to the point where you really don't need fundamentals. All right. You agree? Yes or no?
I'm starting to see that now, because a lot of my analysis, if I just follow technicals, the fundamentals really don't even matter.
Doesn't matter, right? So it's
Yeah.
built in, right? So it's built into the price, right? So, you know, Corey mentioned the pound pairs right here. The pound pairs are all going up, right?
Right.
So why do you think they're going up? If we're looking
Based
at
on
fundamentals.
because of that big U-turn that the UK had made
Okay.
about the hikes and the sorry, brain fart, about the hikes, and also like the decision of taxing like the top 45% of their population.
That's a lot of stuff. That's a lot of
On top of Brexit.
that's a
So
lot of
all of that stuff.
that's a lot of people. Does it really matter though? They're going up. Think about this for a second, right? And for everyone, right? Because I know we always like to want to know why, right?
Yeah.
Does it really matter though? Here, look here. Does it really matter to know that information?
No, just follow the price action in
Yeah,
the rotations.
yeah. Does it? Because you mentioned, right? Sometimes it get kind of fuzzy, right?
Correct.
Why does it get fuzzy sometimes? Because it doesn't match, right?
Yeah, it never matches. It's like it's like it's only for, I'm trying to say retail trades, but it's only for like people looking for answers to like, people actually like looking at what price is actually doing.
Yeah. So and that's a lot of work, that's a lot of research, right? And even if the data is great, right? You've seen it
Yeah.
before where data is great, right? The news is great and the price still does what? Go down.
Whatever
Right?
it wants to do. Yeah.
It does whatever it wants to do, right? So if we focus just on the price action, guess what? We save ourselves a lot of work, a lot of headache, right? And we can execute, right? We can buy here just based on price because it's breaking resistance, and sell when the price breaks support. So much easier, right?
Yeah.
So much easier. All right. So I know it's hard not to follow the news, but it makes a simple process, this simple process here, a lot more difficult. All right.
Yeah, that's right. Makes you second guess yourself.
Yeah. You know, yeah. Let's see here. Was it Deborah? Was it you that had Amazon? Was it Deborah that had Amazon? Was it you, Deborah, that had in Amazon stock? You guys.
No, it wasn't me. I
It
was having
wasn't.
a problem with the, but I'm feeling happier about it now with the Swiss franc and the Danish krona.
Oh, that's right.
Yeah,
That's right.
dollar is losing steam. So is the Swiss franc. So I'm happy.
Yeah, that's right. So you're able to manage. And I thought about you after that call, and I thought about you all night long, because I wish I had your symbol to kind of help you manage out of that trade rather than, you know, closing the trade. You know, manage, right? Manage your way out of it. Okay. So I'm glad you did that.
Yeah, well, thanks for saying that. Yeah, I was holding on because I was figuring, I know what you said, don't hold on too much because then the loss would really multiply.
Yeah.
But yeah, but I am listening to you because now I want to get into some of these pound, like the pound Aussie, etc., and pound Canada.
Yeah, those are looking nice. The yen pairs are setting up. But yeah, whenever you guys get in trouble in a trade, just kind of manage. Don't just rush and close everything. Kind of manage yourself out of it, okay? And usually sometimes things might pull back a bit so that you can kind of minimize your loss, okay? So good job, Deborah. Good job doing that. All right. Zaire, you quiet. I hate it when Zaire is quiet. Zaire and Peter. I hate when those guys are quiet. Let's see here. All right. We are watching, and we'll be done in a minute. We're gonna keep an eye on here is the daily time frame. Don't give up on the dollar. All right, here is the pullback in the dollar here, right? So this is the daily time frame. You still have a buy signal here, pullback, right? That's that pullback, right? And we know we're out of the dollar, but we're gonna put up a 240 here. So we got a 240. So if we get a buy signal on the 240, we'll see those dollar pairs, right? Those dollar pairs move again. All right, but for right now, that trade is over, right? For right now, that trade is over. So we'll look to call, if we can get a few more buy signals with the yen pairs, right? We'll call a rotation in the yen pairs. And don't forget, with the yen pairs, right, we're nicely in markup phase. Let me take a look at pound yen. Oh, pound yen, nothing here, but it's moving up here, right? Pretty decent trade. This is on a weekly time frame. But I want to show you guys, if pound yen can get past here, we'll get a buy signal on the weekly, right? Up in here. All right. Let's see here. Euro, Aussie yen, right? On the weekly. So these are nicely in the markup phase. And look at CAD yen. All right. So this is setting up nicely. Definitely setting up nicely here. All right. And I think that's all I've got. Any other questions? Anything else, guys? Anything else? All right, that's all I've got. Tomorrow will be the beginners class. I'm trying to think what else. I had something else. Let's see here.
You put stop losses?
Stop loss?
Yeah, to control your risk.
Does anyone want to answer
Or is that
that?
for options?
Hey, Rose. Welcome, Rose.
Hi.
Hello. Hey, Corey, I'll let you answer that, Corey. Stop losses.
With stop losses, the general rule is going to be like 1 or 2% of the size of your trade. But of course, if you ask David, he's gonna tell you, he's probably gonna advise against that because it's at 2%. It's probably going to be pretty easy for you to get stopped out of your position, and you never know. It could go higher, like that stock or that position, whatever position you were in, could shoot through the roof. But you'll be out of it by then, and you'll have a case of FOMO, like fear of missing out. And you'll be wanting to get back in, but then, you increase your risk with that. So, but if you do set a stop loss, I mean, it's good to go with the rules, but sometimes it's good to see exceptions.
Yeah.
Yeah, that makes
Corey.
sense.
Good job, Corey. Good job. All right, Corey, you've been paid. Man, growth, Corey. A lot of
Thanks,
growth.
Corey.
A lot of
I've been reading, man.
You guys can put a stop loss. I am against putting a stop loss, right? Not because of the system, right, and how we trade. All right. Just keep in mind, right, when traders put if you're going to put a stop loss, and we talk about this, right, your support and resistance lines, that's your area, your buy-in, right? Your buy zone. Hold on. Your support and resistance lines that you see here. And we'll end with this, but this is important. All right. Everything is important here. All right. So here is our support and resistance lines, okay? And we're always going to buy. We buy when the price breaks resistance. We sell when the price breaks support. Okay, the problem is if I can find a better. I'm trying to find a good example here. Hold on, hold on. Okay, here is a better example here. So Artel, is it Artel? Am I pronouncing your name right?
Yeah, that's right. Thanks.
Is it right, Artel? Okay.
Yeah, that's right.
All right. I'm bad. I'm horrible with names. Okay, so follow me here for a second. And everyone. Okay. So when we trade, we want to buy, always buy when the price breaks resistance. This purple line here is our resistance line. All right. So all right, this purple line right here, that's our resistance line. So we bought here, right? We bought here on the break of resistance. All right. Our support line is here, right? Our support line is down here. And this is a wide support line, but it is our support line is right here. All right. And then here is our resistance line. So we got a buy signal. The system give us a buy signal right here. All right. This area in here, if we are going to put a stop loss, we've got to put it below the support line. Right? Why do we need to put it below the support line? Because that's where sellers are going to come in, right? So sellers will come in and push the price lower. What a lot of traders will do, they'll put a stop loss. If they're lucky to buy on a break of resistance, they'll put a stop loss in this area here and get kicked out of the trade, right? And guess what? All of this right here, we need to give the trade room, right, to pull back. And we'll see this a lot where we had a buy signal on the break of resistance, price will pull back, right, before it moves higher. All right. So you can put a stop loss, but you can't put it in this area in here. All right. And, you know, Corey mentioned 3%, the price doesn't care what percentage. Right. So you can put, if you put it here, you're going to get stopped out. You put it here, you might get stopped out. You've got to put it below support, right? By the time the price hits support, right? Kind of like here, right? Hit support, that's when sellers are coming in, right? Hit support, that's where sellers are coming in. All right. This is here. This is still buying territory where the buyers are still working things out. Okay. So I'm not against support and resistance, right? I'm not against it. Is if you're going to put support and resistance, put it below your support line, right? Put it below your support line. That makes sense, Artel? That makes sense.
Yeah, I actually remember the way you showed us with this support and resistance, and I kind of apply it to or how I intend to apply it with all my trades, I guess. And controlling my risk too. So yeah, I really like the way you showed it. Thanks for that.
Yeah.
Yeah, another thing you might want to keep in mind is your true support and resistance, because your true support and resistance might not be in line with what the signals are showing you on these charts. You have to be mindful of where you got in the trade at. Just to put that out there.
Mm-hmm.
Especially if you're gonna apply a stop loss.
Yeah, let's see here. I'm trying to find. Here's a good example here. So here is the buy signal here. We've got, remember, we have to give the trade room to run. right? It doesn't just go up in a straight line, right? Right. So like here's the buy signal here. The price came up, right? Came back down, right? And I know this is scary. Came back down, right? If you put a stop loss anywhere in this area, we're going to get stopped out, right? And you guys, those of you who've been trading for a while, you know this happens a lot, right? You get stopped out, and then all of a sudden the trade goes up, and you're like, "Oh man, I knew it," right? But guess what? We're not in the trade because we got stopped out. All right. So that's why we don't put a stop loss. If you're going to put a stop loss, you have to put it right at that support, like right here, right? We bought here on a break of resistance. Price hits support right here. We got out. All right. So that support is going to be the key, right? Buying resistance, sell on at a break of support. So if you put a stop loss, put it right below your support. All right. All right. Good job. Good job. All right, guys.
David, can I just squeeze in before we break?
Yeah,
So-
sure.
Okay, thank you.
Deborah.
So
Mhm.
you almost use the stop loss like catastrophic insurance. So
Yes.
it doesn't wipe your account out if it goes all the way down or all the way up. And I like that because I'm always getting stopped out at 3%. But if
Mhm.
I had something at say 10%, or as you said, look at your individual pair that you're trading and see where the floor is, go there or go right underneath it. And that'll be your quote unquote, as I call it, catastrophic insurance. I like that idea.
Yeah, and not only that, very good, Deborah. Not only that, right? That stop loss should be where sellers, right? Sellers are kind of hanging out, right? So it's a protection, but it's a change in direction, right? We only want to get out when there's a change. We don't want to just close the trade, just randomly close the trade, right? We want to get out when it's over, right? When it's over. So here's an example here, and we can, if I could go to the charts, and they're all over the place, right? So here, Deborah, if you look here, right, here is support, right? Here is support here, all right? Right here is support, all right? Here was our buy signal right here. There was our buy signal on a break of resistance. Price broke resistance right here. Here is our buy signal here. Let me move this. All right. So yes, we want to protect the trade, but we want to get out when the sellers, right? When the sellers are coming in, right? So here is support right here. This yellow line is support, right? The price broke support, and guess what? Here is our signal right here, this white arrow to close the trade. All right. So here was our buy signal. Here, this blue arrow to buy. Price never came down, right? And we love it when the price does this, right? Just moved right in, right up, big candle, buyers came in, right? Price didn't break support, right? Kept moving higher, right? It wasn't until here, we call this the distribution phase, where sellers came in. Red candles, sellers came in. That's we got out here. All right. All right. So yeah, we always write this down, right? We want to sell on a break of support. Only when the sellers come in, break of support, red candles, we want to get out. Okay, that's why stop loss, if we put a stop loss in here, stop loss in here, in that markup phase, we're going to get stopped out, and your trading is going to be all over the place, right? All over the place. Break, we want to buy when the buyers are buying, break on resistance, and we want to sell on a break of support when the sellers come in. So buy, break of resistance. When the buyers are in, sell on a break of support. Okay, if we're going to put a stop loss, right, we're gonna put it right down in here. Yes, not just because things could just go terribly wrong, but because this is where the sellers will come in, right? Below support, below your floor, not on your floor, below, little bit below. All right. All right. Keep working things out. All right. Keep working things out. All right. We'll have the beginners class tomorrow. So I'll see you guys tomorrow. Okay. All right. See you guys tomorrow. Take care, guys. Have a good evening. Take care. Bye-bye. Oh, Deborah, does that help? Did that help, Deborah?
It did. I couldn't unmute. Thank you so much. Thank you.
Okay. All right. Take care, guys. Okay. Bye-bye.